It was pure pandemonium on Wall Street heading into Thursday's trading as the markets are questioning global growth prospects. Now think about it like this. Over the course of 2018, 2019, started imposing tariffs against China, started renegotiating the NAFTA deal with Canada and Mexico. Now what's happening here? GDPs are starting to drop a little bit. We're seeing global estimates for growth being measured down to the lower end of 2019 and into 2020. Welcome to the MTI Minute. This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute. How do the markets react? Like they would anytime you have something you don't understand, you sell it. That's right. We're going to go right into the charts on the SPY, and the conversation begins right now. So here we are, the first 4 down days of 2019. How about that? So now everybody's thinking, oh, this is the end of it all. Well, this is not the end of it all. This is just the first few down days and what has been the most historic start to a bull market into a year on record. We want to make sure we understand that. Double-digit, triple-digit down days on the Dow Jones, 1% drops across our major exchange-traded funds here, such as the spiders and the diamonds. Do not change our overall view. Just a quick short-term blip is the diamonds now drop below the 5%. The concern here is that we are not able to break new highs. Now in a bull market, you'll have consolidations, you'll have corrections, and then we'll always try and establish another high. And the growth concerns being felt around the world are impacting the bottom line results. Financials are feeling a little bit of fear there. Technology is selling a little bit of fear there. And healthcare stocks are also not helping out. As we head back into the charts on the Dow Jones, you can see that once more, this is even impacting technology. Technology is actually carrying a smaller stick to the fight. And so we're holding on, but this has been going sideways for a few weeks. We still have the crossovers on the moving averages giving us a foundation for bulls. But, you know, trends don't just end in one day. So 1 week panic does not necessarily cause me to freak out. This is the Russell 2000, much more aggressive, a huge path of selling yesterday, a large path of selling this morning as we've retested and broken the 200 period EMA. We're above it at this time, folks. This is just a reload zone for the bulls as far as I'm concerned. So you're going to let what's happening happen and then get ready to re-ride the train, the freight train, the cash train, the money train. This is crude oil. Crude oil's been trending sideways here for the last 2 weeks, not really moving the Dow there. But I've had some questions asking them, hey, what's going on with some of our defense stocks? What's going on with, you know, this industry, that industry? And so the question about growth prospects here, I think you're seeing a lot of pressure on our financials. And I'm going to pull these up as well. And we're going to start with Goldman Sachs. Goldman's is, you know, rallying back up off the low today. These don't have the best charts. Financials themselves don't necessarily carry the full bias of a bull or bear market. They're more bit players behind the scenes, as it would be, in establishing the trend. As you don't see any of these with super duper charts. This is Citigroup, starts with a C, and that's actually below the 62.50 level and below 62 bucks, holding some support. We're either going to bounce here or we're going to trounce there. Now I'm on Bank of America. Bank of America currently trading to $28.52. Got stopped out of a call trade here. My stop was at $28.70. Market took that out at the open. I'll take a small loss and jog on from something like that. But even as I was saying, working with the financials, here's JP Morgan. Not a great amount of leadership here as well. So when you talk about markets trend, what's carrying the market? Is it the financials? No. Is it metals? No. You're going to have different baskets moving in and out of favor and moving in and out of the flavor of the day. You know, the flavor of the day that drove us here the entire time ago was built around the FANG stocks, right? Your Facebooks, your Apples, your Netflix, your Googles, etc. One of the main prognosticators of market bias in our major indexes is Apple. And Apple has largely unmoved the dial here over the last 6 weeks. So if you're a bear, you're actually still asleep in the cave because it's not necessarily a bearish market. If you're a bull, you're not walking into the dip buy. We actually needed the markets to come down off of our recent highs to see whether or not we have the conviction to make new highs. This is the first gut check of 2019. So no time to fear, no time to panic. Instead, be patient, wait, let these things culminate into price direction. You'll be very well buying this market next week. A trade deal is definitely going to boost the equities markets, but the equities markets are now no longer listening to the wolf cry. They instead want to see a wolf as opposed to hear someone crying wolf. So we need to see some progress made in a deal with China, and we need to see it right about yesterday. Back into those charts, and I'll take you through a few more of these, notably Facebook, spent a few days, this is a 15-minute bar on Facebook. Facebook has spent a few days rallying up off lows. As I move into our daily chart here on Facebook, and you can see Facebook forming what could be a potential cup with handle pattern off that big gap up from the earnings there back in late January. Facebook is giving us some leadership, even if they help coax fake news. Amazon having a rough day. Amazon, where did my chart go? Where did you go, Amazon? Come back. Here we are. Amazon around the 1650 level. A lot of ticks here as well. Amazon is not the same stock that it was in 2017 and 2018. I think that's one of the things that we have to understand. Now, Netflix is improving pretty well. We like Netflix above 375 level on the call side. And the Goog. The Goog is also just kind of moderating along there. So we don't get the leadership of the FANGs that carried us to the last market high. Now, let's kike our conversation into some currencies here, because today was a day where, once again, we've had some good volatility fueled through solid fundamental news. This is a 60-minute chart on euro dollar. And you can see 745s when the rate statement hit, right around $1.13. As we're heading into lunchtime on Wall Street, euro dollar's listing lows right around the 112.20 mark. So there were two components that happened with the rate statement. First, the statement itself, and this is where I want to explain a little bit about what's going on. Mario Draghi is getting ready to step down in his role in October. And there's a good chance that he's going to step down without ever having raised rates on the euro. As a matter of fact, they're at 0%, and they left rates unchanged once more. Now remember, we're talking about growth prospects dropping around the globe. They don't have a lot of faculties at their disposal should we actually go into a recession. This could really cause a tumble in the Eurozone. And what's the play there? Of course, the play is to short. And that's what the markets are doing right now. Now, they did go in and put a little bit of more monetary stimulus into the marketplace, but that showed a very dovish tone. And as the dove plays, so the markets sell on the short side. As we head back into these charts on euro dollar, nice move. This is the day's action. It was doing a big old nothing burger until this happened. Check it out on the 15-minute time frame. It's going to be beautiful. Oh, look at that. Hello, lovely. And there's just a straight elevator down. Now, this is the play for the day. The euro yen is down as well. Euro yen's dropped over 100 pips here from 7:45 to 8 o'clock. The folks on opening bell were just feasting on this like they were at the White House eating McDonald's. I mean, we're talking feasting here. There's your 7:45 mark, 160.50. You've got yourself a nice 100 pip slip once there on Euro Aussie. Euro New Zealand also looking slick, and that's going to make Cornell happy. Cornell and I were talking about targeting ranges, and I was explaining, hey, you target down to your next level of support, you target ahead of the next level of support, that way you're profiting. So I'm actually looking at this potentially below the $1.65 level. We got about another 70, 80 pips as Euro New Zealand is sitting on the lows for the session right about now. Here's Euro CAD. Looky there, $1.51.80 at that mark, and this has dropped over 120 pips. The whole play on the day. Check this out. There's yesterday's Canadian dollar rate statement weakening the CAD up. Today, the euro gives that back plus more. It's a beautiful thing. There's a sympathy play here as well. I'm going to show you the sympathy play. Did you know that the Swiss National Bank pegs their currency to the euro? And as I show you, by comparing the euro dollar versus the dollar franc, and we'll go ahead and make that a busy little tree. And now we've got two lines. Now check this out. In Smart Trader, I'm going to do a line chart here. And don't tell me if you see an ink blot. What do you see here? That's because the Swiss National Bank pegs their currency to the euro. When the euro moves up, the franc moves up. When the euro moves down, the franc moves down. Not at such a fast pace. But look at that chart. It illustrates that this, in fact, is an ink blot. So if you miss one, go for the other. If you're not catching those trades on the euros, consider following up with the francs. Like the franc yen, the dollar franc will be going up as the euro dollar is going down. So these relationships always come into play. Now, you know what's really great about that? Is I know that my folks are making some pips, and that's all that matters, because performance matters. You invest in time, you invest in education, you invest in tools, and you need to make money. This is what we know. And it's March Market Madness. So this is a special time of year for us here at Market Traders Institute, where we're giving back to our clients. What are we giving you? We're giving you education, how to trade fundamentals like we talked about here today. We're also showing you how to work with technicals, and then marrying technical trading and fundamental trading to create a well-balanced plan. It's a very exciting time. We've got a variety of topics that we're giving to our clients. We would like to invite you to join us here as well. If you look in the description box below, there's a link that you can click on and get registered to tune into this class. You won't want to miss it, and we'll even give you a little something extra extra special for your time. You know why? Because in March, as in every month, we're in it to win it. Thank you for tuning in to the MTI Minute. This is Kevin Dixon. We will see you next time.